Dear subscribers, FutureTrend channel is glad to welcome all of our readers, and for the date of 13 November 2018 we are ready to present our point of view of how to trade major currencies in the world foreign exchange markets. And today, as part of today's analysis, we'd like to concentrate your attention especially on the euro currency. As you know, yesterday the euro currency broke below pivotal support level 113. Now we are speaking about technical kind of reasons in trading of the euro currency, and of course it's a kind of a really very important signal for the medium to longer term direction of the euro currency against the United States dollar. So the double bottom formed against the level 113 finally was broken yesterday, but we should understand that's because of political crisis in the European Union. Of course, also because of logical economic effectiveness of the current policy conducting in the United States. That's not only the monetary policy but also the economic policy, among them trade issues as well as kind of taxation. And from this point of view, the United States dollar should continue to outperform some other currencies. As you know, 75% of dealers, 75% of investors, now we are speaking about wealth kind of investors, they suggest that the rates in the United States will be raised during next Federal Open Market Committee meeting that's scheduled for the December. And also the market still expected another 2 hikes from the Federal Reserve during the first part of 2019. From this point of view, the United States currency should remain quite well supported. But we should understand that in case of a real kind of progress between Rome and Brussels regarding the future budget deficit of Italy, of course the euro currency could receive some boost, could receive some support. That's a kind of logical fundamental point of view. And today is Tuesday 13, not kind of a lucky date. Anyway, that's today is a deadline for the Rome to present a new version of its budget to the European Union. And most of market participants suggest that the planned budget of a deficit budget of 2.4% will remain the same as before, and from this point of view the euro should remain under selling pressure. Anyway, we suggest that after that there will be a lot of discussions, and we think that sooner or later we could hear some promising words from the part of Italian officials regarding the future efforts to reduce the budget deficit, so on, blah blah blah. And we suggest that sooner or later the euro currency will be back to above 113. From that point of view, and from the point of view of technicians, we should understand that the level 111.87, which is by the way the 38.2% retracement barrier from the rise of the euro currency from the lows of January 2017 or 103.40 to the highs of February 2018 located at 125.55, that's level located around 111.86 and should present a kind of a reasonable support barrier right now for the euro dollar. That's why during today's session we suggest that probably it should be interesting to buy the euro dollar at 112.10 with a stop below 111.80, where lies this kind of barrier. At the same time, from very short-term point of view, the level of 113 should present a good level to resell the currency on a possible retest of that level. Anyway, in case of daily closing above 113, of course, the euro currency could be back and to really improve its bullish picture. That's why we put a stop loss in case of selling at 112.80. We put a stop at 113.10. As regarding the euro crosses, today is the date of discussing of the euro pairs. As regarding the euro crosser, the euro yen should remain quite well supported because of a resilience of the Japanese yen to any kind of risk aversion sentiment. Now we should understand there are, by the way, a lot of them, and among them, in the Japanese yen, there are first of all the China-United States trade conflict, political crisis in Italy, the Brexit uncertainties. Also, we should understand that the stock market in the United States continue to remain under the selling pressure, especially the tech kind of part of the stock market. And from this point of view, there are a lot of reasons to buy the Japanese yen. Anyway, we see that Japanese yen the dollar yen continues to remain quite well supported. Anyway, the possible up spike to the level 114.50 we will use as to sell the currency, and we even will add to existing position on a possible rise to the level 115.5 with a stop above 115. In our case, with a stop above 115.70. Let's be back to the euro crosses. As regarding the euro sterling, here the situation remains quite in the arms of the cable. And from that point of view, any kind of news regarding the Brexit negotiation process should remain the pivotal area of discussion for the sterling pairs, for the sterling crosses. Anyway, if we take into account the euro sterling, while below 0.89 where lies current downtrend line, the pair should remain under the selling pressure also because we are still trading below a moving average 200 daily line located at 0.8832. As regarding the euro Swiss also is quite resilient to any kind of risk aversion situation, and here we suggest to remain more or less stand out. And finally, regarding the euro ruble, we should understand that ruble is quite volatile at the moment because of the sanctions, continuous sanctions from the part of the Western countries against the Russian Federation, and from that point of view, probably in the short-term run, the Russian ruble will remain under the downside pressure. Anyway, we suggest that the Russian economy still is very resilient to any kind of external factors, and we suggest that they are just a matter of time when the Russian ruble will finally appreciate very strong. But that's our longer term point of view. Thank you very much for all of your attention, our dear subscribers. See you tomorrow and take care. Bye bye for now.